Good morning, Binanceans, and welcome to this week's episode of Binance Beach. We originally advertised this episode as Market Blues and Recovery Clues, but as of this morning, it feels like we're definitely underway in recovery phase. We've seen an amazing bounce back from Bitcoin and a few of the other leading tokens as of this morning. So let's jump into it. I've got the absolute pleasure today of being joined by Tom Mitchelhill, internet coin enthusiast and the crypto journo. I'll pull him up and let's say hi to Tom. Welcome, mate.
Mate, thanks so much for having me on. Glad to be here.
Fantastic. We'll kick it off as normal with our price update for the week. And Bitcoin is down just under 6% on the last 7 days. But of course, anybody who's been following the crypto space at all in the last week can see or felt, I think, very viscerally the pretty significant run we had on Monday from around the $60,000 mark or 61,000 US down to touching $50,000 US, which was a pretty enormous wipeout in terms of price action. And we'll touch on some of the things that caused that. But then we've had a really significant recovery over the last few days, and we moved back up this morning and even got above 62K briefly. So really, really strong recovery in the Bitcoin price, which is fantastic. What actually happened? Well, I think this. We'll get into a little bit more about why this crash potentially occurred, but this is the chart of the Japan's interest rates, and we saw Japan raise interest rates properly, I think, for the first time in almost, I think it's 17 years. And that is potentially one of the catalysts that caused this cascading market downturn. Binance Research had an amazing article about why this happened, and they actually run through a whole bunch of other potential factors as well. I've linked to this in the show notes, and they reference specifically that macroeconomic weakness and spillover from the decision of the Japanese to raise their interest rates very slightly. There was also unemployment rate that ticked up in the US, which could have potentially been a macro factor. The article also talks about obviously headwinds coming from the US and a bit of a run that Kamala seems to be having in the US election, and then some geopolitical tensions as well. Before I profess to being an expert about the yen carry trade, Tom, what happened this week? What were you feeling at the start of the week?
Oh, well, by no means an expert on the yen carry trade either. Like many others, I think I was learning about it Twitter in real time on Monday. Exactly. Who are all experts on the yen carry trade, of course.
Absolutely.
But yeah, I do think that it's the most obvious thing. I think that a lot of people have a tendency to overreach for explanations. That's the clearest sign of what unwound markets and spooked everyone over the weekend, because you've got your yen carry trade where people borrow in yen with low interest rates to buy foreign owned assets, and then you hike the interest rates and everyone goes, oh no, yen's up, this is not good, I want a weak yen. But that kind of rinsed into risk assets of like, okay, dollar's not as strong, just there was also that localized sell-off that you had in the S&P 500, NASDAQ as well. And I think that just risk in general took a big plummet. But overall, yeah, I think it's a healthy kind of flush. I think that markets were a bit crowded on longs. It was very like just keep going higher for longer. And that nuke that we saw on Monday was a nice reset. And I don't think that we're going to see too much more, in my opinion, of any retesting of any lows or anything like that.
Short-term bullish, that's good to hear, definitely from a market's end. What about the recovery this week? Do you have any thoughts on how strong that bounce back was and what might have been driving that recovery?
Again, I think that this V-shaped recovery is really just a strong signal that what we saw over the weekend was a localized issue. And there's a lot of things that kind of aggravated that. I should have mentioned this before, but it's in crypto as well, like specifically for crypto, because you had your sell off in equities, but in crypto itself, we also had jump crypto just unloading, hundreds of millions of dollars of crypto onto the market over the weekend during an equity sell off. So I think that the nuke itself on the weekend and on Monday was aggravated by that. You also had crowded trades on leverage, particularly for ETH heading into the ETF. I think people got way too optimistic on ETH and how high it could go. And so you had, I think it was 1.2 billion in liquidations just on Monday, which is nuts. And 90% of those were leverage longs. So I think that we've seen a good position wash where a lot of traders have been, taken back to levels where prices are accurate, where liquidity is strong. And I do think that it's generally like, it's indicative that it's not a recession and it's not some kind of deeper systemic risk. Like, oh no, the wheels are going to come off. Everything's done. It's like, no. I think the economy in the US is just fine. And I think that the appetite for risk will come back and is already coming back. So yeah, I think strength moving forward.
Absolutely. It's a nice segue into the spot ETF flows this week on the BTC and on the ETH side. Initially, we were wondering whether the ETF holders were going to paper hands and potentially capitulate along with the rest of the market. It didn't look like that happened at any particular scale. This is the spot Bitcoin ETF net flows. So showing how much in total was bought or sold by the time you take all of the, I think it's 9 ETF providers, and you add up what was bought and what was sold. This is your net result, right? So essentially how much overall BTC or ETH was bought and sold, just to explain this chart quickly. And we did see slight outflows earlier in the week, but they're definitely not major and they're definitely not spiking or showing significant sell pressure, which is great. And that was a really strong indication. On the ETH side, we actually saw the first really significant days of inflows since the ETF's first launch, which was very exciting from an ETH perspective. Obviously, this, similar to the way the Bitcoin ETFs launched, has been driven by selling of the grayscale products, but we're now seeing net inflows, which is fantastic. And not only that, they're fairly significant too. Almost $50 million on the Monday, almost $100 million on the Tuesday, which is the 6th. And I'll definitely be looking to see what the inflows potentially could be looking like off the back of this rally. I think that'll be fantastic. Outside of Bitcoin and ETH, did you have any takes on the altcoin market this week? How did it respond to these macroeconomic factors?
Yeah, so outside of the majors, altcoins did very well, and that's another really, really good sign. Because the further you go down that list of altcoins, the deeper you get into how willing people are to bid. And so, Solana in particular was something I think that showed probably the most strength in the top 10. It bounced like 37% on the day after Monday. Sol ETH ratio cracked a new all-time high. Which is, the value of one Solana to one ETH, which just shows that, again, ETH to me looks oversold. I think a lot of people, again, got rinsed on the ETH longs. And I think that, these kind of like Ethereum and a select few alts are going to perform really well in the coming months. Telegram Open Network showed really, really good strength too. Same with BNB. Yeah, I just think it shows again. There's confidence in alts. There's confidence in going further down the risk curve, and yeah, that's pretty much it.
Well, let's go way down the risk curve to meme coins. They had a really strong start to the year, and there were a few really, really strong growers, but they've been a pretty mixed bag in Q2. What's your take on this segment of the market? How is it performing? Is it positive for the space? Give me your take on meme coins.
Oh, okay. This is where I'd say I'd divert from the more reasonable mainstream. I'm extremely bullish on meme coins, and there's a couple of reasons for this, and they're not too controversial, but they are definitely, again, a lot riskier. This cycle, I feel, for the average retail participant has been marred by the launch of a lot of these low float, high FDV, quote unquote VC coins, where the tokens that are being brought to market, the new ones, are being launched at multi-billion-dollar, fully diluted valuations, which is it's terrible for retail investors. And I think that the response to that, the market response, has been like, okay, well, screw you guys, we're going to go make our own gains, and we're going to gamble on meme coins, which is essentially all it is. Unfortunately, I think meme coins, I don't know if you could call them a net negative to the space, and I don't know if you could call them a net positive either, because it is the best and only way to describe meme coins is they're a Mexican standoff, and everyone's kind of holding the gun, no one's shooting, and everyone's like, okay, this is good, but eventually, like, a meme coin chart will always look like this at some point. There has to be a time where the wheels come off, and I think that's one thing that if anyone was going to invest in meme coins, they have to understand, and that it will. They're like not a guarantee, but it's almost a guarantee that at some point things will go very, very bad for a meme coin bag. But yeah, I do think that memes will continue to outperform moving forward, particularly because there's so little in terms of new tokens hitting the market. Like back in the 2021 cycle, you had a lot of these coins, like Solana launched at a $500 million FDV. And a lot of these coins showed very, very good promise for retail investors looking to buy utility coins, things that were actually, useful in the crypto ecosystem. But I think that that's been capitalized on by, the venture capital class. And so I think that meme coins are just the natural immune response of retail degenerates being like, nope, I'm going to make my money elsewhere. But yeah, with that said, if investors are willing to stomach a lot of volatility on major meme coins, then sure, again, very risky. But my thesis is that meme coins will continue to move for the rest of the cycle.
And I think it plays perfectly into the financial nihilism mindset that a lot of the first world even has at the moment. It's a really tough time for a lot of people. And in this environment, it makes sense almost from an individual and a retail perspective to look for a 10x, look for 100x over a 10x, or look for an enormous potential profit and payout over studying more in detail these actual products or actual companies building actual products for actual applications. So I think it's going to be a fascinating thing to watch for the rest of this cycle, and particularly I think off the back of interest rate decisions in a few leading markets, whether that is going to be a significant factor, whether freeing up cash and easing the cost of living is going to help the meme coin market, or whether if it does continually tighten, whether that's going to drive more of the financial nihilism mindset. I can see upside on both sides there. It was a crazy week, but it's over. We're back in the green, or at least we've got green candles. But zooming out, what's your crypto outlook for the rest of 2024 and into 2025, Tom? Are you bullish or are you bearish?
Bullish, quite bullish. I just think, there's, again, looking back to the recovery that we've just had, it shows that there's no systemic risk. There's no... at least temporarily, there's no signs of a recession on the horizon. We've got rate cuts pretty much, guaranteed in terms of how they've been priced in September. Now, one caveat there that I will put in is that I don't think that the rate cuts, the first round of rate cuts, or even the second round of rate cuts, if they occur, are going to be as bullish as some people think, because they're going to be small. They're going to be 50 to 75 basis points. And, that's not going to bring about this. I've seen some people saying that it might bring about like a COVID style rally where you just get that, again, the 2021 vertical style move up. I'm not sure that that's the case. I think with institutions involved now, the moves in the market will be generally a lot slower. But on the whole, I do think things will continue to melt up. And it's because those rate cuts, they're small. They're not necessarily making money cheap for everyone. again, but I do think that they will concentrate into the more like innovative asset classes, because people will be able to get loans easier. Cheaper money is always better for risk assets. So there's very little downside. I just don't think there is as much upside as some people are suggesting. So take your rate cuts with a grain of salt. You've also got the election in November. Yeah, well, yeah, we've gone from Trump being the clear leader against Biden, and then Harris coming out, having a good VP pick, seemingly more popular than Trump's. And yeah, I think that Harris has a very decent chance of winning, particularly the popular vote in this election in the United States. We'll have to see whether or not it's an electoral college decision like it was with Trump last time. And again, Kamala or Trump presidency, I don't think that that's necessarily something that we can look at and say, oh, this is bullish or this is bearish, depending on which one gets in. Clearly, a Trump-Vance ticket is better for crypto assets. But Vance was a former VC under Peter Thiel. He's routinely called out Gary Gensler. Trump said he'll fire him if he comes in November. But I also don't think that a Kamala presidency is necessarily the worst thing for crypto. Will send us to new lows or anything. We reached Bitcoin's all-time high under a Biden administration with a very unfriendly SEC. So I don't think that it's necessarily one of those catalysts that you look at and think, oh no, if Kamala gets in, it's over. It's not as good for prices as Trump, but it's okay.
That's definitely a good point. I've heard a few people point out that we have had a pretty strong 4 years under a Democratic government in the US, and potentially have made more movement on policy in other key areas than the Trump administration did previously. But I'm not an expert on that side of the world, so I'll probably defer to someone who is definitely more well-read and well-researched there.
Yep.
We'll run through a couple of quick industry call-outs on the Aussie side to finish us off for this week. DECA, or the Digital Economy Council of Australia, announced Ep06, I hope I've pronounced that correctly, as their new head of policy, and Denali J as their new operations manager. So congratulations on those appointments. I look forward to working with those exceptional individuals. The AFP had a press release this week. They were doing some incredible work in conjunction with Chainalysis, tracking down some criminals, and Binance and other exchanges were thanked in that press release. So, of course, scam prevention is a massive focus for us here at Binance. So it was fantastic to see some recognition there. Binance Australia was named as the best rated exchange by Forbes Advisor for Aussie users. So thank you, Forbes, for that shout out. That was really fantastic. And then finally, we do have a campaign running at the moment, which is one of our better offers that we've had more recently. If you are a current Binance user and you refer a friend to Binance, you'll both get a 20 USDT voucher when they register and complete their first trade. I'll drop a link to that in the show notes. So if you do have some friends who you'd like to help embark on this journey of financial freedom that we're all on and financial education, then this could be a great place to get them started. I'll finish with a disclaimer. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. Thanks so much for joining us, Tom. That was a great chat. Look forward to having you on again soon.
Liam, thanks so much for having me on. Really appreciate it.
Cheers. Catch you, Binanceans. We'll see you next week.